Statistics Canada just released numbers for Consumer Price Index for the month of November. The Consumer Price Index rose 2.2% on a year-over-year basis in November, matching the increase in October. Here to discuss those numbers and what it means is Veronica Clark, economist at Citibank, joining us with more. Veronica, good to have you. Thanks for joining us this morning.
Yeah, good morning. Thanks for having me.
So 2.2%. I believe most economists were expecting 2.3%, so a little bit lower than what most were predicting. What do you make of the 2.2%?
Yeah, it's not anything to read too much into. I don't think I was also right around 2.3, but it's a small downside surprise. It's really the details, when we dig into the details here that will matter more. What happens with services inflation, shelter, things like that. We did, of course, get these core measures also released at 8:30, and there has been some more slowing there. So it does look like some more positive signs of underlying inflation slowing.
So when it comes to the details, though, I'm not sure if you've had time to look into it. I was just trying to look while you were speaking. I know many were expecting gasoline prices to be the main driving factor here, food coming after that. Is that what you're seeing? Is that what you expected?
Yeah, I had a very brief look at the details also, and that seems to be what we see in this number. Those gasoline prices, that's never too surprising when we get this inflation data. We already have data on gasoline prices for the month. Unfortunately, as we're getting into the next 4 or 5 months, it is going to be harder, even in some of these details, to look at these inflation numbers, because if we go back to this time last year, we had all these tax changes, the sales tax holiday, the carbon tax removal in April. That does create these base effects for some of these components. So that those core measures really become, I think, a lot more important here.
Has the ongoing trade war with the U.S. or the tariffs that we're seeing really affected these numbers in any way, do you think?
It's very hard to point out. I'm inclined to think that there has not been much of a price impact. A lot of the price impact on Canadian prices, of course, would come from retaliatory tariffs that Canada has on the U.S. And there were some of those, there are some of those, but a lot have been lifted and changed over time. There were some surprisingly strong goods price increases earlier this year, really around the spring. Maybe that was some preemptive price increases, but I'm inclined to think there has not been a whole lot.
We know the grocery price inflation is now at its highest since the end of 2023. I mean, when we're looking at these numbers coming out today, how do you think that's going to affect consumer spending moving forward?
No, it is absolutely, of course, a concern. That's something that people are spending on frequently. It's an essential spending item. And when you see higher prices there, it can have impacts on how you're perceiving inflation. Of course, how much you're spending on groceries versus other goods. Those do tend to be very volatile prices, though. And so when we want to see what the underlying trend of inflation is, you kind of tend to look through those food or energy prices. They can move around a lot month to month, but it does probably affect people's perceptions of the economy. Maybe you would see less spending on other goods if you have to spend more on groceries.
I know you touched on this, but when we're talking about the underlying factors, then if it's not gasoline prices, if it's not food prices, like what kinds of things are you looking at?
Yeah, so in the details of this inflation data, one interesting thing has been that there has been some stickiness in certain rent components, that rent component of CPI. It's been a bit out of line with some other industry measures on rents, certainly out of line with fundamentals of home prices that have slowed a lot more, housing activity. Of course, immigration, population changes have slowed a lot. That could mean less pressure on rents, but we haven't seen it in the official data yet. We'll dig into the details this morning and see if we start to see some of that. But I would expect the fundamentals of demand being a bit softer should mean that those rent inflation measures should slow too.
I know I'm asking you a lot of questions when you haven't had time to dig into the details just yet. But I mean, when it comes to how this might affect the Bank of Canada's decision on policy rates moving forward, do you think this will move the needle at all or change things?
Yeah, probably not this number today, but I do think we'll see more slowing in core inflation as we get into next year. And I think I'm a bit of an outlier on what I do think the Bank of Canada is doing next year. I actually do think they could be cutting more. They're certainly on hold for now. If we did see any dramatic shift in the labor market, maybe they would be cutting again. Certainly, we've had some stronger labor market data, but I actually do think that if underlying inflation is slowing, they do describe policy rates right now as on the accommodative end of neutral. And maybe policy rates, monetary policy can help support the economic recovery a bit more if you're not as concerned on inflation. So I do think if we saw more slowing in underlying inflation, they could be cutting again on that alone.
And in terms of these numbers this morning, like just before I let you go, is there some cautious optimism here in terms of what we're seeing, or like very cautious, or not so much?
I think that's fair. Yeah, we'll again see some of these details, but it's been a couple months now where those core inflation measures have slowed more. When we're trying to forecast this, there's a number of leading indicators of inflation I tend to look at. Things like how much are firms struggling to meet demand? Can they raise prices more because of that? And all those leading indicators do suggest that inflation should be slowing more. And so I wonder if we're starting to see that in the hard data the last couple months.
Okay, Veronica Clark, economist at Citibank. Appreciate you joining us this morning. Thanks so much for your time.